Hello guys, welcome. This is Deepika from wealthandhealthmastery.com, and in today's video we are going to cover semiconductor ETF. Now, if you are little hesitant on investing in an individual stock, or you are a conservative investor and you don't like to invest in individual stock like Nvidia, which is a very volatile stock at the moment, then you have other options, and your option is investing into a semiconductor ETF. And this semiconductor ETFs will give you exposure to all the companies that deal with semiconductor, or they deal with the goods and services that they provide to the semiconductor manufacturers. So directly or indirectly they deal with the semiconductor sector. Now, if you believe that these semiconductors are going to be the future, and if you believe that the growth of them, this particular sector, is going to grow over the next couple of years, then you should definitely invest in these semiconductor ETF. Now, what are these semiconductor? They build these chips, and these graphic processing chips, GPUs, are being used everywhere around us. They're being used in building the new AI models. They are being used in the computers. It's being used in electronic devices like refrigerator, TVs, washing machine. All of these use these semiconductor chips. So if you believe that these ETFs are going to grow, then you should definitely invest in, and it'll also give you less risky than buying an individual stock. So if you invested in Nvidia, and if the Nvidia goes down, your portfolio value is going to go down tremendously. But if, let's say, if you have bought a semiconductor ETF and that exposes you to Nvidia, then even if Nvidia goes down, there are going to be other companies which will balance your portfolio. So the risk is less as compared to buying individual stocks, and also you're going to see a lot of growth in these stocks over the next decade. So what are semiconductor ETFs? Semiconductor ETFs invest in stock of companies engaged in the manufacturing of semiconductors. These can include both semiconductor makers themselves as well as companies that provide goods and services to semiconductor manufacturers. What are the reasons that you should invest in semiconductor ETFs as compared to individual stocks? One of the reasons is you should never put all eggs in your one basket. So if you are buying Nvidia shares, you are kind of putting all your eggs in one basket. But if you're buying an ETF, you are splitting your eggs in different baskets. You are buying certain shares of Nvidia, you're buying certain shares of Broadcom, Qualcomm, Taiwan Semiconductors. So you are getting exposure to all these companies. Through that, you're reducing your risk. Your growth potential is going to be a little bit less also, because if you are just invested in Nvidia, and if the price of Nvidia goes up, which will be much more riskier and also much more rewarding, whereas ETFs are less risky and less rewarding. It depends, but I would suggest I'm more of a conservative investor, so I don't try to put all the eggs in one baskets. I do have Nvidia stocks, but on the second hand, I also have a lot of these ETFs as well. One bad earnings can be bad for Nvidia, and it's risky to put all your eggs in one basket. Semiconductor ETFs will be less risky investment for you. The strategy not only mitigates company-specific risk, but it also allows you to capitalize on the sector's growth potential as a whole. So these are the reasons that instead of buying individual stocks, you should be investing in these ETFs. Now, what are the benefits of investing in semiconductor ETF? One of the benefits is it is going to give you exposure to high growth sector with strong fundamentals. You know, the semiconductor sector is going to grow for the next decade, and investing in these semiconductor ETF will give you exposure to this sector, which is going to grow over the next decade. It will also give you diversification across multiple companies. You are not just investing in one company, you're investing in multiple companies. And what are the holdings of each of these ETFs? You can see it online by Google. A simple search will give you all the holdings. The top companies that deals with semiconductors are Nvidia is one of the top players. Then you have AMD. Then you have Micron Technologies. Then you have Qualcomm. Then you have Intel. You have Broadcom. You have Taiwan Semiconductors. So these are all the companies, the major players, but Nvidia is one of the top players, but these are all the companies that deal with the manufacture of semiconductors, or they deal with directly or indirectly with semiconductors. So through investing in ETFs will give you exposure to all these companies. So diversification will be there, and also potential for long-term capital appreciation. So over the long term, your capital is going to appreciate. So these are the benefits of investing in semiconductor ETFs. Now, how do you buy these semiconductor ETFs? So if you are somebody who deals with buying of stocks through the same platform, I personally use Webull, but you have Webull, Robinhood, all of these brokerage account, you can use them to buy the ETFs, or you can also use your individual retirement account to buy these ETFs as well. So any brokerage firm, any brokerage that you're using, you can use it to buy these ETFs. Now, what are all the different ETFs that are available? So we have VanEck Semiconductor ETF, iShares Semiconductor ETF, Direction Daily Semiconductor ETF, Granite Shares. Now these two, Direction Daily and Granite Shares, they usually their 100% allocation is it in one company. Okay, so Granite Share is completely allocated in Nvidia, whereas Direction is completely allocated in one of these Granite Bank shares. So that is why you see the year-to-date growth has been tremendous for both of these, but they are not giving you exposure to all the semiconductor companies. Then you have First Trust Nasdaq Semiconductor ETF, SPDR S&P Semiconductor ETF, ProShares Ultra Semiconductor ETF, and Invesco Semiconductor ETF. Out of all these, I personally have invested in VanEck because it has given me exposure to Nvidia, Broadcom, Qualcomm, all of these different companies. And the growth of the ETF has also been good, which is 53%, which is a lot year to date. We are only 6 months in the year and it is already given a 53% return, which is very, very good. The iShares Semiconductors have grown over 31% over the year. Direction is 91%. Granite is 430%, which is a lot because they only focus on one stock, which is Nvidia. So if you are more risky investor, then you can go for it. I personally am not a risky investor, so I don't like to invest. I know the more risk, more reward, but I'm fine with less risk and a little bit lesser reward. First Trust Nasdaq Semiconductor has grown 24% over the year. SPDR, which is Spider, has grown 10% over the year. ProShares Ultra has gone 183% over the year, which is also very good. Invesco is 27% over the year. So these are all the different semiconductor ETFs that you can invest in, and it will also give you the growth to your portfolio. Now, if you want to see what are all the different holdings, so you can Google it very simply. Let's say we wanted to see the top holdings of VanEck Semiconductor. All you have to do is you write the ticker symbol SMH holdings. And once you do that, it is Semiconductor ETF. And the second link I'll go with, and you can scroll down here, you can see the total net assets is 24 billion, year to date return is 51%, current price is $264, expense ratio means how much it is going to cost you is 35.35%, which is not bad. So it means out of every dollar you'll be giving 35 cents for this particular ETF, which is comparatively high, but it's not too high, and it started in 2011 inception date. Now if you scroll down here, you can see here holdings. So 20% of the whole is invested in Nvidia. Taiwan is the next 12.85%. Then you have Broadcom. Then you have is 5% for Advanced Micron Technology. So this completely builds the whole portfolio of VanEck. Okay, so VanEck invests in all these companies, Texas Instruments, Micron Technology. So you are getting exposure to all of these companies through this particular ETF. So similarly, you can Google any other ETFs and you can get an idea on their holdings. This is the major chunk of VanEck is invested in Nvidia. So if you believe in Nvidia, you're going to see growth in your portfolio through this VanEck ETF also. Now, as I mentioned to you, expense ratio plays a very, very important role because you have to take this into account when you are investing. And usually for ETFs, the expense ratio is a little bit on the lower side. But since these semiconductor ETFs are more volatile as compared to and more risky than other ETFs, their expense ratio is also on the little bit on the higher side. So Invesco expense ratio is very less, which is 0.19%. Invesco Semiconductor ETF, which is PSI, is 0.57%, which is very high. So this is yearly expense. So in the year, if you have used, or if you have invested $1, then 19 cents is going to be towards your expenses to managing that ETF. Invesco is 0.57%, iShares is 0.35%, VNAC is 0.35%, which is comparatively less. Spider S&P Semiconductor is 0.35%. Granite Shares and Direction is almost more than 1%, which is 1.15% and 1% respectively. So the bottom two have a higher expense ratio as compared to the remaining ETFs. And as I mentioned to you, these two are 100% allocated to one asset. They are not giving you exposure to the whole SPDR sector. The Direction Daily Nvidia only looks at Nvidia stock and it gives you returns based on that. Granite Shares is going to be focuses on Granite Bank. The 100% allocation is in that particular stock. These are the expense ratio. Now, as I mentioned to you, let's say we look at one of the ETF called SOXQ, which is Invesco PHLX Semiconductor ETF, and it holds the top 30 largest US listed semiconductor manufacturers, and one of the top holdings is Nvidia. Then you have Broadcom, AMD, Micron Technology, Qualcomm, Taiwan Semiconductor, and Texas Instruments. So all of these ETFs pretty much invest in the similar company, but the percentage that they invest in varies. So some invest more in, let's say, Taiwan, some invest less towards Taiwan. So it depends on which ETF you're buying. So the exposure to that particular company is going to be either more or less, but all of these companies invest in the similar companies only, all these semiconductor ETF. And you have seen the growth of these ETFs is tremendous over the last 1 year. So it is a great investment opportunity for you, and it also is a less riskier than investing in individual stock. I hope you enjoyed the video, and if you really like the video, please like and subscribe to the channel so you do not miss any more videos like this. I'm going to see you in the next video with another topic. Thank you so much and have a wonderful rest of the day.